Listen in for another great week in the markets. This is Paul with OUTPACEsys.com, and this is your report for the 14th of November 2008. Let's look first at trades. All the major equities indexes have been trading in a range in the last month, with large and violent swings. We're looking forward to the time when the markets decide which way to go next, and that's when we'll be able to use the cash reserves that we've been keeping on hold since the end of last year, when we had the long-term indication of the impending downturn that's still underway. When a trend is established, we'll then be able to open new long-term trades. For now, however, given the high volatility of the market, this past week we continued focusing on short-term trades. And let us review here what we did with the Qs, our favorite Nasdaq 100 related ETF. We had two signals with the Qs, the first one on Monday, calling for a bearish trade that we executed with the November 32 put, symbol QAVWF, and closed on Thursday. The second was a faster long trade we started on the November 30 call, symbol QAVKB. The results are in the following table. We show here once again what a $2,000 investment would have generated. As you recall, we used $2,000 for each trade that we start. In the first trade, we could buy 14 contracts at $140 each. The trade gave a fantastic 164% profit, turning the initial 2K in $5,220. In the second trade, we could buy 13 contracts at $144 each. The trade had a great return of 82% profit, so we closed the week with a fantastic profit of $4,554 from the initial $2,000. That's the power of options. The Nasdaq 100 Index weekly chart is shown here, where you can see the range trading that we've mentioned before. The trend is definitely bearish. We and the rest of the world hope that it may turn back up, but for now that's just hope, and we don't trade on that. We still don't have any signal for a long-term trend change. The signals we did have on a daily scale are reported in this chart, and this, well, is just one more view of a bearish market. The S&P 500 Index weekly chart is shown here, showing a very similar behavior. The relative signals are in this chart, and for the Dow Jones, well, no different news for the Dow Jones either. This is a performance comparison chart for the three equities indexes that we follow, showing them all heading back down after an attempt to change way last month. Equities lost anywhere from 25 to 35% in these last 3 months, the Nasdaq 100 being the most extreme as usual, although the three indexes have a very similar shape in their performance. On a yearly basis, we are now looking at losses around 40%. All sectors shares these general trends. The financial sector took yet another drive in the last couple of weeks and is now down 55% for the year. Consumer staples have the so-called best performance, really the less negative performance, down 19%. The only two sectors that showed positive returns during the year are energy and materials, but it is now sad to see how deep and how fast the situation changed. The international equities have not done any better than the US in equities and are now down 35 to 55%. Let's now look at commodities. Crude oil continues its dramatic fall, as shown in this weekly chart and the signal charts. This is now a long-time trend. If anybody thinks to join that train, think again. This is dangerous territories and volatility is expected. Gold also continues on its way down, as shown in these charts. Finally, bonds are still looking up, enjoying the lack of confidence the world now has for equities. This is it for this week's report. Thanks again for listening in. Please come and visit us at OUTPACEsys.com for additional details. Happy trading!